Good morning and good evening, everyone. Welcome to AI Co-Spot webinar panel discussion, which is themed around future-ready banking and payments, innovative strategies for digital era. Our participants come from all over the world. We have quality speakers lined up for today's webinar to share their insight. Now to begin with, let me introduce myself and the company to you. My name is Arvind Kannan. I'll be your host for today's webinar. Joining me, Nitin Naveen, who is VP Innovation Strategy at AI Co-Spot. Archana and Naveen assisting in this webinar to keep it lively. Our focus is our focus today is on exploring and discussing the latest trends and technologies shaping the banking industry. Before we dive into our discussion, let me provide you a brief background about AI CoSpot. We started 3 years old with a mission to be number one AI-driven community all over the world. Our goal is to provide in-depth insight across various industries wherever technology plays a crucial role. Each month, we are exploring different themes, gaining momentum to create a platform for like-minded people to come and contribute and ensure our success. Our mission is to serve as a hub for information regarding Industry 4.0 technologies. We will also continue to do industry-packed webinars and hybrid events. The knowledge repository will be made from the reliable data through industry thought leaders and subject matter experts. We'll also enrich the digital content through videos, blog, podcast, newsletter to shed the light on ever-evolving industry. I request all of you to go through our website, aicosport.io, for further updates. Also, like our social media handles, which will keep you all updated on what we propose to offer in coming months. And special thanks to our community partners, which includes TD, Mastercard, Societe General, and InfoVision, for invaluable support in making this webinar a huge success. Now, let me introduce our panel speaker one by one. We have Natarajan, who is the Chief Business Officer from InfoVision and the moderator for the panel discussion. And we have Gretchen, is the Head of Product Payments from TD. And we have Jennifer, who is the SVP Global Digital and FinTech Commercialization at Mastercard. And we have Charles, who is the Director of Digital Asset Structuring at Societe General. So before we proceed, a quick disclaimer. The views shared by the speakers are the personal one. It's not related to any of their organization they work for. Without wasting any time, I'll quickly hand it over the stage to Natarajan to drive this panel discussion. Over to you, Natarajan.
Thanks, Arvind. And good morning, good evening, good afternoon, to all of us and the audience joining us from different time zones across the world. And I hope the new year is off to a great start for all of you. Again, thanks for taking time joining this webinar, which is focused on innovative strategy for future-ready banking and payments. And as you all witnessed, last 12 months, the financial industry has been going through unprecedented changes, right, driven by broader economic factors, market conditions, with a couple of big banks going under and regional banks going through some struggle. But overall, I think from Q3 of last year, I think it started stabilizing, and we will see positive growth in the BFS industry. But through and through all of this, banks are continuously, and all financial institutions in general, are trying to continuously reinvent themselves in order to thrive in this dynamic environment. And one thing that they have to embrace is innovation. And innovation is not just technology, right? It's technology, people, process, combination of all of them. But technology drives most of the changes. So one key aspect of cutting edge technology adoption, you would have seen the buzzword AI everywhere these days. Then, we have blockchain, we have machine learning, now we have AR, VR, we have hyper automation. So we have a lot of different technologies, that are in play today in order to streamline and optimize, operations across all industries, provide better customer experience, new features, products, and also to enhance security, right? So I would say we are lucky to be witnessing a culmination of all of these technology. It's almost like a golden era of technology evolution, as all of these new technologies come together across all industries. We have seen the reduction of traditional brick and mortar bank branches, and more is driven towards digital and mobile banking. So ultimately, the future-ready bank should, put customer in the forefront, right? And all of these things are around customer experience. So everything has to, make sense to the customer. So they have to leverage all of the data that they have about, customer or end consumers, derive meaning out of that data, get the insights, and decide, what are the features that make sense to the end consumers to thrive in this, competitive market. Uh, but you can have all of the bells and whistles and products and features, but end of the day, it has to be safe and secure. You need to protect the customer data, and we are seeing almost on a daily basis somebody getting impacted, right, with cyber attacks. So there are a lot of zero trust solutions also in play that banks are embracing. So overall, this webinar, I'm looking forward to hearing from the industry leaders like Jennifer, Gretchen, Charles, from your standpoint, what you're seeing, in your own organization or your personal views or, your segments. We want to learn your experiences and perspectives on how all of these different technologies are helping drive innovation for a future ready, banking or, financial institution. So, with that, we'll take questions also from the audience. As time permits, we'll try and cover all of these topics. So let's get started with my first question. And like I mentioned, these days I have not seen any product or service without the word AI attached to it. So I'll start with GPT, Gen AI topic. So I know it's taking all of the industry, by a storm, right? Every industry is toying or playing some use cases or the other with Gen AI. So what do you guys think on the best use cases for Gen AI that is applicable to banking and financial services industry? Do you guys think it's a hype? Like metaverse came, everybody wanted to do something, and then in a way it fizzled out. So first thing is it a hype? And if it is not, what do you guys think on the useful use cases for our industry?
So I can go first if you
Sure,
want.
please go ahead. Please go ahead.
So Jen Premisler, everybody, thank you so much for joining. So I have a few thoughts around AI technology in general. If you've been watching the Davos conversations over the last week, you would have seen that it was really the hot topic at Davos. I'd say it was the main topic, in addition to sustainability and some other really important things. I don't think that AI or generative AI specifically is a trend or a fad, I should say. I think it has staying power. I think the basis of the technology has been around for a very long time, going back 50, 60 years where machine learning started. And so I don't think that it will go away, similar to the metaverse, which I've studied a lot in my work around fintechs and the video gaming industry. Just like the web. So Web3 is the technology behind metaverse. I think that technology will stay and has staying power. It's the question of what are the use cases built on top of that. AI, I think absolutely, and generative AI has staying power. I think the best use cases are already starting to come out. There's kind of consumer-facing and business-facing use cases that are pushed out, particularly through many fintechs, but also large players that we all work at. But then there's also how you can use generative AI to make your internal processes better. And that's a trend I think is absolutely sticking. I think it's a great thing, and will bring a lot of value to organizations. Let talent do meaningful work instead of mundane tasks. So that's really where I see it being the most impactful today. But I think that there are many use cases to come.
Okay. Anybody else add to it?
Yeah, I can complement what was said. I agree that there are different ways of seeing it, more on the processes versus analyzing user behavior versus understanding ways of working. So everything is definitely being shaken as we speak. So there are two specific use cases that I really feel passionate about, and it's one. The first one is about web development, right, or product development in general. If we take a look at the whole cycle product development, we can see how AI can be infused and definitely boost the general productivity and all of that, right, for engineers, but also data scientists and everything. So that's one use case that I'm very passionate about. And the second is it's more about understanding the user behavior. There is this book that definitely changed my life, Everybody Lies, where it talks about what we say versus how we act and what the data is telling about us. So I definitely foresee a future where we can plug in the machine and understand what we're really thinking through that analysis, right, in terms of behavior, and get actually surprised. I know PFM and all of these tools are already showing us what we do in terms of finance, but I would love to see more of those intentional recommendations happening after the regular analysis empowered by AI.
Okay.
Yeah, maybe I completely agree, and maybe why I think that it will stick a lot more than metaverse or other is that it's much more easy for people to use and discover how they can leverage on this I would say new tools as opposed to a metaverse or blockchain where it can be quite technical, and for a long time it was a kind of a solutions that we're looking for use cases. Generative AI and other are really accessible, and that makes it a very, very powerful tool that everyone can use. And it's more a question of how we can manage, data privacy and things like this than finding use cases, I think.
No, I agree with Jennifer, when you mentioned in some form or shape this has been there for a long time. Right now we have had chatbots, we have had robo advisors. So in a way, they keep learning user behavior and specific characteristics, and then they provided whatever recommendations similar to what Gen AI or AI is trying to accommodate. But now with the large set of data, I think it can do more powerful things, right? So that leads to my next question. Since BFSI industry is heavily regulated, right? There are a lot of compliance requirement. How do you think financial institutions will walk the thin line between doing something that say AI is doing, and if something bad happens, what are the repercussions and who is held liable, right? So that's one of the things that in my almost 30-year career I've seen the BFS industry is slow to adopt new technologies because one, there aren't clear guidelines. The guidelines always change, so they don't want to do something and then revert back, or keep changing, spend more money. So what is your view on how the banks can stay compliant, especially implementing these new technologies, and stay within the regulatory confines?
I think it's probably about starting with those use cases that can be less that can create less conflict. Like I said, maybe with the product development might be one where you're actually not building something that is a customer face solution. As you mentioned, I think the biggest concern is always what happens if we train something that we need to untrain at some point. And but the word is already there. So I think it's probably about starting with those use cases that you can control somehow. Probably evolving more on the creativity part of things, marketing that might be interesting ones about creating the different images, subject lines, and all of those pieces. That might be an interesting scenario where we can control the reality and kind of increase that confidence. And lastly, I think it's about having the communication now with the regulators. We know that there are official conversations happening as well at the government level and all of that. So definitely having those professionals within the bank, probably the legal team or the compliance, being very close to those conversations. That might be probably the only thing that can happen at this point. And definitely a big leap of courage and faith to be able to make it happen. But again, I know that the regulatory pressure is definitely a big thing. So I would probably start with those scenarios where you can control it.
Okay. And any views from others?
Maybe so. I don't know how familiar the people joining the call are with how internal processes are within banks, but before launching a new product or a new application or using a new technology, there are a lot of committees, a lot of analysis to be done with all the internal relevant teams from legal, compliance, tax, operations, IT risk, etc., etc. So, and that's why I guess most of the financial institutions have been very cautious on these subjects because it takes time for everyone to assess and see all the potential issues. And I'm probably I'm pretty confident that we will see new things happening in the coming weeks or months.
Yeah, so this never a dull moment in terms of regulatory compliance, right? So the CFPB, SEC, FTC, so they're actively cracking down every single thing when it comes to new technology or implementation. And now they made some headlines last week or the week before with the crypto ETFs, and even before that happened, they had a debacle with their X account getting compromised, right? So this so much scrutiny, especially when there's a new thing that they want to introduce into the market. They want to make sure that all I's are dotted, T's are crossed, before something gets put into the market, and then it's very difficult to undo and go back, right? Yeah. So now, Gretchen, you talked about a little bit on the payment space. So what are the global trends that you see in this space, and how, say the US or Europe or Asia, what are the regional variations or growth that you see?
Yes, I think the first one that it's kind of the biggest one at this point is everything related to fast payments. We're seeing a lot of activity, of course, India, UK, US, Brazil, some of the biggest markets. This is something that the industry with fast payments. I think the biggest difference is definitely kind of the government or the pressure that can come with that. When we take a look at other countries like Brazil or even India, we see that there is that interaction coming also from the government, when it's more like this is the Moscow place, versus in US where we see this difference between the TCH with real-time payment and the FedNow. So who is going where, who is adopting what. So that is definitely creating a little bit of that beautiful dance, but still challenging for us in terms of deciding where to go first. No, so I think that's the biggest difference. And in general, I'm seeing other big things happening, like for instance, everything related to unattended payments options, how the user is probably preferring those point of sales at checkout where there is not a checker or another person on the other side to finalize the purchase, right? All of that revolution in terms of the point of sale with buy now, pay later, and all of those things. But definitely a big interesting space there. And probably one of the things that we are seeing now after last week with the news about Apple and the potential access to the secure element in Europe and what it's going to represent for the rest of the country. So I think that is definitely going to be definitely a game changer, and it will put us in a perspective of, okay, what are we going to do if we have the access to the NFC, what it's going to be our strategy. And if that happens, and when that happens, I think we're definitely getting closer to that moment where all the companies become a fintech, or all the companies are payment companies where they have to create their strategy. And if we pair that with the reality that the Gen Zs, the millennials prefer payment instruments provided by brands, there might be an interesting game there to see how we are all evolving, to react to these new realities. So I think those are some of the three big trends that I'm seeing globally. There are other ones that we can talk later on if we want to go more specific on the US. But yeah, I would say those are the biggest ones.
Right, I was on mute. Thanks, Gretchen, for that perspective. And Jennifer, since you are also in the same space, and you have global presence, from Mastercard standpoint. So, what are the things that you are seeing, the trends globally in payments area?
So, quite similar to what Gretchen said. I think the kicker on all of it is there are many ways to pay now that didn't exist 5 or 10 years ago. Consumers are expecting that optionality, and merchants and businesses want to provide that optionality because it means more sales, more better consumer experiences. However, I think that sometimes it's very hard for our merchants and our partners on the acceptance side of the payments ecosystem to be able to keep up with all the innovation and to make changes in their systems. It's costly, and they don't know which trends are going to stick. And so it's really important that we as a network and banks and other financial institutions really think about how to balance the rolling out of new technologies, partnering with some of these real-time payment capabilities, buy now, pay later capabilities, whether they're homegrown in a FI or in a network or it's through a partnership, and making sure that we kind of balance that with the impact to the businesses who are providing goods and services to consumers.
Yeah, so I am interesting that both of you mentioned, BNPL. So I think the data after the holiday season that got over in December, I saw about 30 to 40% jump in BNPL, payment method compared to the previous year, right? So, and I think most of or all of the younger generation, they are preferring that payment method, and it is applicable almost in every store these days, and thanks to technology adoption, right? All of the retailers, merchants, online or in store, they are open to all of the different methods to help customer pay however they see fit. So now segue to a different question, right? So since we're talking about e-commerce and retail, what are the things that you guys feel from a user experience standpoint, right, that financial institutions, payment companies, or even merchant should adopt to meet the needs of younger generation?
So
Gretchen, you want to get first?
Yeah,
go ahead.
Go ahead, Gretchen.
Go ahead.
No, I was just going to say, I think, again, we have to be mindful when we talk about generational shifts, that as folks grow in their careers, grow in their families, their preferences do change. And it's not, some of it is based on, what they grew up with and what they were young professionals or young consumers using. That's going to influence, of course. And so we will see likely a bent towards buy now, pay later in that generation. But at the same time, as they have more income and more responsibilities, their decisions about how they want to pay and how they want to think about budgeting their life might change. So I would just keep that in mind. And the other thing is, well, you mentioned that many merchants are offering things like buy now, pay later, and other great experiences. Gretchen managed, like self-checkout or biometric checkout. Those are all really interesting too. But I think where we do have still an impact problem is the majority of merchants in the world and businesses who provide goods and services are actually medium-sized and small businesses. And they're not necessarily rolling out these technologies, not because they don't want to, but because it's costly and hard for them. So while we're seeing it in our big box retailers or large service providers like, ride shares and stuff like that, it's much harder to do when we're talking about mom and pop shops who really do spur the economic growth, at least in the US, but also around the world. And so I just, again, think that that needs to be taken into account.
Yes. Yeah. So you mentioned this. If we take a look at the numbers, it's I forgot now, but it's literally 9% of commercials. So something that are more on the pro space and all of this. It's a reality.
Kristen, I think
On
your
top of
voice
that,
is
I
getting.
would really think,
I think your
yeah.
voice is getting cut off.
Can you
I don't
hear me now?
know, or others can also hear you clearly, but it's a little bit choppy.
Okay. Let me double check. Now, better?
It's better.
Okay. Yes, and I think on the behavior part of things, I agree on the points, and also let's think about other industries that are being disrupted, like gaming, for example, digital gaming, which is representing around 63 billion opportunity today, or 63 billion size. Again, we have the conflict between the ethics and all of this. We know that, but it's a reality that it's an industry that is growing, and at the same time, it's also like you mentioned, Jennifer, the elder population, for instance. How are we going to expose the different payment options? How are we going to allow them to interact with a point of sale to decide, etc. With the biometrics, it's going to be easy for them to adopt and all. So all of this is a reality in terms of behavior, and there are other things that are more attached to technology, as you mentioned, the pay by bank, which is something that I think is going to be also big for this year. The evolution on the checkouts and all of these card on file, how our users are managing the cards on file, the wallets, like I mentioned, the access to the NFC, if that happens at some point here. So all of this is it's definitely paving the path for a new world, I think. And if on top of that we think about sites, how as a merchant to provide personalized offers, we know that the preference for users to use cards that are giving them personalized offers and rewards, like how all of this can change the game, that is definitely a different scenario. And the combination between the tech readiness, the user behavior, and a little bit of this psychology of money, I think that's also something that combined will put the ecosystem in a beautiful moment. So looking forward to that, definitely.
Yeah, no, I mean, couldn't agree more, right? So, personally, I've witnessed a lot of change or evolution in the payment space, right? Somebody said that we didn't come out of Stone Age because we ran out of stones, right? We created or made things better for us. So, same is true. I remember when we used to have the physical device where you put the credit card or debit card between two papers.
The knuckle buster.
Yeah, and then slide, and then somebody enters it in the back end, and then we changed to swiping. Then we had the chip reader. Then we have the contactless. Then we started paying by phone. Then we started paying by watch, and now we pay by palm, right? So Amazon has this biometrics payment, and then maybe one day when Elon Musk is done with the Neuralink project, we think about paying somebody, and then probably it automatically happens. So I mean that's the evolution, and one, it is convenience, and also it has to be safe and secure, right? So Jennifer, Gretchen, because you guys are in this space, as we evolve to a lot of different payment methods, like we have QR code, we can just scan and we can pay. You don't need to pull out a credit card or anything, right? And then we have payment methods like, say, Zelle or Venmo, PayPal, where with the email address or a phone number, I can send money to you. So all of these, evolution in payments is good, but how do you think, and it improves user experience also, right? Convenience. And what are the things that, say, from the back end, banks or merchants or even credit card issuers or processors, what should we do for preventing fraud? because that's another hot topic. We've seen Zelle, Maiden, fraud, and then paying back a lot of money, etc. While these things improve customer experience, customer wanted, in a way, it's table stakes these days. We have to provide those things to keep customers. But on the other hand, you have a challenge of how do you make it safe, secure, and avoid fraud?
Yeah, so one of the advancements that we're really proud of at MasterCard, but others are involved as well, and fuel some of those use cases, from knuckle buster to card swipe, et cetera, I think there's two things. One is we have standards. The EMV Co. Standards are really important in that. There's other standards that all FIs and payment companies follow and have agreed to follow as a consortium to ensure that we're kind of using the newest technology in the best way to create safe and secure experiences for consumers and providing the least amount of chargebacks, which is a big fraud point for merchants, because that's costly to merchants. And there's a lot of what we call friendly fraud in the system, where you actually did purchase it, but you intentionally charge it back. That's kind of the nefarious version. Or you don't realize that you had bought it. A kid bought, something. My kids buy stuff on the video games all the time, and then maybe I get a notice that says just Sony or says Apple, and I don't really know what it's for, right? And so an adult may charge that back. But there's technologies that have been around, at least for 8 to 10 years, around tokenization. And a tokenized transaction is much more secure, both from a fraud perspective, and it increases approval rates when the transaction is tokenized versus not. And that's using another type of technology, which is cryptography. It literally creates a cryptogram so that the actual account number, what we call a primary account number, a PAN, is hidden to those merchants. And instead, what they're seeing is a tokenized or cryptogram number on top of that. And there's a trusted party in the middle who can undo that cryptogram and then send the right message back to the consumer's card issuing bank, so that everybody knows whether that transaction was valid. There's still potential for fraud, but it's much less. And then on top of that, there's even more technology that financial institutions and networks have created around authentication. So not only is the transaction tokenized, but now how do we authenticate that consumer is who they are? And there's various ways to do that. You can do it through device authentication, both in-store transactions and e-commerce or online transactions. When you use like an in-app, pay, Apple, Google, Shop Pay, etc. There's also authenticated transactions through other biometrics and through other services from these financial institutions and networks. And when you can authenticate that consumer is who they are, the likelihood of fraud goes down substantially. So the tokenization provides a lot of value from a fraud perspective because it hides the PAN number. But then on top of that, if you can also authenticate the consumer, you have two ways of preventing fraud at the same time. So that's the best way to do it on a traditional payment transaction. When it comes to some of these other technologies or other companies that you mentioned, there's just, because they're not tokenized, nor are they necessarily authenticated. Some might be in some ways, but others are not. And the fact that the payment moves automatically and right away in real time, that's really great for the consumer from an experience perspective until they've paid someone they don't mean to. How many times have you gone on Venmo and they're like, are you sure you actually know this person, right? And there's potential for fraud from a cyber attack and a data breach, but there's also potential of fraud because, somebody is making an account that looks like the account that you actually intend to send the money to. And once it's gone, it's gone. There's no, Federal Reserve, cap on how much you can lose, like there is on a deposit, right, at a bank. And there's no guarantee from that our issuers and our merchants in a card transaction may benefit from. And so that's why those types of payments can be a little bit, can be more risky. I don't even want to say a little bit, but they do provide that consumer experience. And there are some cost differentials because you're not getting that value of safety and security.
I have a follow-up question to that, but I know, Gretchen, you want to add your views as well, so I'll hold on to my question. Please
Oh,
go ahead.
definitely. I really love the point that Jennifer was bringing in terms of tokenization. And if we want to go even deeper with everything that is happening in terms of the TCH, the token that they are implementing for real-time payment, that might be an interesting, just to keep a track on that might be an interesting solution. And I think there are two other things that I would love to continue seeing more and more. The first one is definitely that standardization coming through the adoption of ISO 222. So we can definitely see how probably leveraging the different fields, 180 fields or all of those at some point might help to kind of have transactions that are more standardized and therefore reducing that chances for fraud. But even more importantly, the collaboration, I think, between institutions, the consortiums that are being created with different companies stepping into this field and strengthening the relationship. So I think that's also important. And when we think about fraud, it's interesting because still the big chunk of the fraud are involving involving check as a payment instrument. So we are always focused on digital payment, but there is still this legacy in the paper, right? If we take a look at B2B payments today, that 40% of those happen using check as the instrument. And if we take a look at the high level of transactions, the high level of attempts that are involving check, it's like, what else are we doing in that part? So only thing is that let's not forget that bread and butter. Sometimes the big problem is coming through those ones that we already know, but we sometimes focus more on the digital because by default it seems more scary. But the reality is that we have an issue with the other traditional payments as well.
I just want to build on that for a minute because I had an experience. It's a really good point, Gretchen. I had an experience where I met with a fintech, I don't know, 8 months ago or something, and they were actually trying to become more digital savvy and becoming a fintech as opposed to a more traditional player. And the space they had originally been in and still were in were processing checks. They literally were the company with the lock boxes all over the world where the checks get sent. They sit in that lockbox, which is really like a postal lockbox. So that has security issues. And then they run it through this huge machine. And that's still how they're processed to make sure that they're valid checks and all that stuff. They're not, fraudulent paper. But think about how many hands are touching that. And it's not a great experience because it takes forever to process that. And there's risk involved in that for all the institutions and the receiver of the funds, plus the person who made that checkout. But the other thing that is always amazing to me is when you look at a check, all the numbers you need to do something fraudulent are on that check.
Yes.
And for a long time, that was true of card too. But again, when we get into tokenization and some of these better technologies, we take that off, even though there's a card number on the card. Check hasn't gotten there. And so, Gretchen, that's a really great thing that you raised. I hadn't thought about it, but that experience I had was really interesting.
Yeah.
That's
so I don't know
right.
about you guys, but almost 3 to 4 times in a day, I have to prove that I'm a human. So not to avoid fraud, right? So you have to check, what is the traffic light or what is a dog. So you're continuously doing that. I mean, I don't know how much of percentage in terms of improvement or reduction of fraud that has, but companies are trying whatever they can to make sure that it's not robots or bots doing transactions. So one follow-up question from the earlier comment that you guys made, right? I've worked with some of the companies who are also coming up with automatic the CVV code generator, right, in the actual physical card, because they want to avoid fraud. And if that number is static for 2-year period when the card is active, then that's a risk, right? So they have come up with almost like a microchip with a display, and it runs on battery, so it can stay on for 10 years. So it changes the code every I don't know, 5 minutes, 7 minutes, whatever interval that you set, or if you want to forcefully change after a particular transaction, you can do that. So do you guys see that adoption to mitigate fraud in the credit card or debit card space?
Yeah, so I'm seeing like a dynamic CVV code, and I'm only seeing it on tokenized transactions because you really have to have that first level of security and technology to be able to do a dynamic CVV. But when a lot of cards that are digital first, and that's something that we have created a lot of capabilities for to allow for this dynamic CVV and the tokenization. You'll see in your wallets sometimes where you're like, wait, I thought the CVV code was X and now it's Y. That's that technology. And it really, I've not seen it in a physical card yet. That doesn't mean it's not happening. I just haven't been privy to it, but I am seeing it in the digital and wallet space a lot. I mean, Apple, their card that they've issued does have that dynamic. Not only is the card tokenized, it's digital first, it's in your wallet the minute that you're approved, but you also get that dynamic CVV, which is an extra layer of fraud prevention.
If people
Yes.
still want to use the actual card, that's a protection for them. And the tokenization that you mentioned, I don't know when was the last time I actually took out my card. Always pay with my phone. So every transaction generates, its own pseudo number. Yeah. Go ahead.
Yeah, and I think kind of correlated to this, but even deeper by design, it's the virtual cards, right? Like coming as the opportunity not only to disrupt on the B2B space, but also even for consumers. I've been able to issue specific cards for even specific merchants to be used at certain time. So that control is passed to the user. Again, it will imply a lot of need for education, but I'm seeing more and more of that happening, right? Where the user can have that control. It's we are getting a user that is getting more user savvy in general in terms of how to use the technology, more aware of fraud. I think we all, I myself was very impacted with the numbers provided by JP Morgan a couple of days ago about a 45 billion attacks per day. So we are all kind of freaked out on the professional and personal perspective, but definitely that awareness is bringing that familiarity to the user, and that can definitely help mitigate. So I think it's about all coming together and fighting the bad actors. The only thing that puts me kind of on the other tone is like the bad actors are using powerful weapons, and we might not be using that powerful weapon because we are regulated or because we can. So how are we going to go to that war with that difference? Now that's always the thing that keeps me away, thinking, okay, what else can we do? The David and Goliath reality, it's there. So how can we mitigate and close that gap? That's always the biggest source of concern, I think.
Okay.
Yeah.
So I know we covered a lot of topics on the payment space, on the retail banking. So now let's switch gears towards capital markets and commercial side of things. So Charles, my next question to you, since you're veteran in this space in capital markets, what are the technologies that are gaining traction, and what's exciting you in the capital market space?
Yeah, so I would say the technology that we've been the most active on is blockchain. I would say over the last few years. I mean, you were talking about checks, but I have some memories of when I was in Paris a few years ago, and traders were still sending faxes to fund administrators to buy and sell fund shares. So it's in the trading room, you still have a fax in the middle of the room to send faxes. So this is the kind of operational efficiencies where I mean, we think, and we're pretty sure we can do better. So I would say we've been focusing on blockchain for 3 reasons. The first one was operational efficiency, having better settlement systems, reconciliation, and things like this, which are today very costly and ineffective. Second was around liquidity and risk management, and that's again the same as what you mentioned earlier about payment and instantaneous payments. the idea being to have this kind of solutions for capital markets and reduce the exposure on your counterparty. And the last important subject for us was product innovation. As of today, what we see on capital markets is there hasn't been that much innovation over the last years, and we think blockchain will be an enabler for innovation. One thing, for example, that we did at Societe Generale end of last year was to issue a bond and to include the carbon footprint of the issuing process of the product in the product, in the smart contract. It was issued on a blockchain, so that any investor, or actually anyone, because it's on a public blockchain, can see the actual carbon footprint of having issued this product using this technology, etc. And this is the kind of thing that we couldn't do before. To have this kind of data directly linked to the product itself. And this is where we think this is the kind of innovation that we can think about for the future on our space. So I think that are the main topics where we can leverage on this kind of technology.
Do you think players in the capital market space are actively adopting blockchain now? Because it's been there for almost 8 to 10 years now, and I know it gets mixed up with all of the crypto debacle. And now last year we had a string of them as well. So do you see any repercussions because of the ties that blockchain is almost synonymous with crypto impacting implementing your use cases?
Yes, of course. I mean, as I was mentioning earlier, all these projects have to go internally through a lot of meetings, hours and hours of discussions with all the internal teams. And as soon as you have events like FTX or anti-money laundering issues on Binance or things like this, of course it has a direct impact on your project, because from a reputational risk perspective, you don't want subjects to be mixed up. And of course the question is, are you sure you want to be active on this front where media could easily link your project to what's going on the crypto space? And that's, I would say, one of the lucky things that we have on our side, is that we've been able to demonstrate that we were working on I would say the positive side of things, and always in a properly regulated manner, and always with an active discussion with our regulators, either in Europe or in the US, and that helped a lot. Now the thing is, it takes a very long time to get things going on this space, for a very simple reason. We are trying to work on, I would say, a new financial infrastructure, and this is not the kind of thing that you can change from one day to another. Banks' IT systems are very old, for most of them at least. So switching the whole system to a new way of settling securities within a bank, that's a thing. With all other banks, it's another thing. And the whole financial system with CSD, DTCC, Euroclear, Crystal, it's again another thing. And when you add to this component the regulatory component on top of that, you can see why it will take ages before we can switch to the existing system to a full, I would say, on-chain system. But we are trying to go step by step. So, doing some of the transactions on blockchain, demonstrate that it works. A lot of banks have been active on this space as well. Everyone has built their own, I would say, capacity and awareness to be ready when things will move faster. And that's how I think we can make things work, working with other banks, trying things, showing to everyone that we can connect from one system to another and deliver better solutions that we had before. So that's what we've been trying to do, and other banks as well in the space.
And do you think that banks are okay with the decentralized model with blockchain? Because typically banks or financial institutions, they want everything in their own data center. They want control. They don't want to allow access to third-party systems. And even we were talking about before this webinar, joining this platform itself, the IT systems in different banks, won't even allow that, right? So they're very protective of their data, rightfully so, because of compliance reasons. And there was also a couple of breaches, even in blockchain, right? So we have seen that hacks. So, from your standpoint, what are the risks that threaten this innovation or implementation of blockchain in your space?
Yes, you're right, and I think that's why most of the financial institutions that have been working on these subjects have either developed their own version of a blockchain, which is much more private than what you can see on Bitcoin or Ethereum, or they have used our existing solutions on the market, but still in this kind of private environment. This is not the approach that we had at Societe Generale. So far, at least, we've only been working on public blockchains, so mainly Ethereum and Tezos. The idea for us was to be, well, first to leverage on this technology, but also trying to bridge the gap between the traditional financial system and these new actors, the crypto companies, as you can call them, as we are pretty sure, and that's my point of view, again, not necessarily the one of the whole firm, but we are pretty sure that there are a lot of values in this new crypto environment that was built. So we've seen some of the things that didn't go too well, but this doesn't mean that everything has to go to the trash. And we've been working with MakerDAO, for example, which is a completely decentralized organization, and it was very interesting for very old banks such as Societe Generale to be able to do a transaction with this new kind of organization, where there is no legal entity per se, there is no board of directors, there is no, it's not the usual discussion that you have. Now, in terms of difficulties for us to move forward, the first will be regulation, the lack of regulation, and the fact that because everything is moving so fast, regulation has some issues catching up with the space. So in Europe, this will be probably much better in the coming months with MiCA, the MiCA regulation, which is a proper regulation for stablecoins, for cryptos, for digital asset service providers. And also that's why in France, Societe Generale subsidiary also had a license locally to handle digital assets. But for example, in the US, and I'm based in New York now to work on on our expansion of the business in the US, it's a much different environment. Don't really know what you can or cannot do. It's always discussions with your regulators, and it's pretty clear from our perspective and also from other banks' perspective that the lack of regulation is kind of preventing innovation in this space, because we don't really know the rules of the game, if I can say. The second thing would be that as all banks have developed their own private environment or private blockchain, you can say, the interconnectivity between these systems is not that easy, and we don't really want to see a new world where each client is completely locked in a bank system. We want to see clients being able to transfer assets from one bank to another, banks being able to trade between themselves, etc. And there have been quite a lot of initiatives to try to interconnect these systems, and we would be very happy to work on these initiatives, because this is definitely the way for us to find a solution on these markets, to have as many banks as possible working on a compatible system. And the last thing is I would say also the media and the coverage. We've been pretty happy with the, I would say, coverage that we had and that other banks have on these initiatives, because the thing that we were saying about mixing stuff between crypto and blockchain as a whole, this has not been happening a lot and it's the longer it stays that way, the better, because we are really working on two different angles. One in a very regulated way and trying to do the things by the book, which is kind of the opposite of the crypto environment.
Yeah, I was going to say that one of the things that I've always found so interesting about blockchain and its premise, which I think is going to be an amazing technology. I mean, it already is a great technology, but will enable a lot in the future. To your point, Charles, interoperability is a big issue. And so when we were talking about the metaverse before, and I think why that became a fad is a little bit about that interoperability problem. While everybody wants everything to be democratized and decentralized, that's really hard to accomplish if things can't move between blockchains. And I understand why the blockchain, a particular blockchain, might not want movement across to another. It was the same with metaverse environments, which are Web3 is based on blockchain technology. And I think if somebody solves for that, that will make the use cases that you can build on top of the technology all the better and make much more use cases, many more use cases. But that is a big sticking point. And then if you start to get consortiums together, particularly if it's either banking or payments or whoever, advertising, whatever the consortium is, it's going to leverage the particular use case on a blockchain and sort of put rules of the road in place. Or if it's a country regulating or some type of government body regulating, then all of a sudden you start to break down that whole decentralized notion. And so these two things, as Charles pointed out, have sort of been at war since the beginning. I'm not sure how they can reconcile unless broad groups of entities, companies, governments, et cetera, come together and say, this is amount of decentralization we're all kind of comfortable with, and this is the amount we're not. And so there's a certain level of rules of the road. And you do see some countries starting to do that, but how much they can regulate something that is unknown, and the actors are unknown because, as Charles said, no board of directors, no CEO. Trying to figure out how to regulate those folks is also probably going to be a really hard thing for governments.
Yeah, no, absolutely. So, because of the synonymous nature of people observing crypto and blockchain, it masks the benefits of blockchain as a technology, right? So now, because the SEC approved ETFs that has BTC as the base, so do you guys think that there will be adoption for crypto-based ETFs in the capital markets, asset wealth, pension funds or mutual fund companies, trying to implement more and more of that? Do you think that that will gain traction and also help in digital currency adoption and also more blockchain adoption?
That's a tricky question. So for blockchain, I would say that the more attention there is on these subjects from regulators, namely the SEC, the better, because again, we are trying to leverage on a technology which by itself is not good or bad, just the way you are using it, of course. And the more regulation we have around this blockchain and how it's used, the better. Now, will we see more adoption on cryptocurrencies because of ETFs? Well, of course, it will make the investing easier for a lot of people, cheaper as well for a lot of people. Now, I don't want to go into the details of how you would, assess the value of a Bitcoin or an Ether. It's a never-ending question. So, to be honest, I don't really know how it will go. We've seen pretty good flows on the ETFs over the last few days, so it's a good success for the administrators, the BlackRock and Fidelities in particular, and it will probably remain one of the important assets in terms of investment for the next few years. But you never know what can happen on this space. There may be some issues in the future around cryptography and new ways to kind of decrypt the cryptography which is used on existing blockchains, which could change the value of these assets with quantum computing and stuff like this. So it's an interesting subject, but probably not the subject for today.
Yeah, no, absolutely. I think because the blockchain supply is also going to be limited. I think I don't know, April is the 4-year period where they cut the supply in half, right? So as the supply reduces, the demand increases, and the price is expected to even go high. So yeah, we can speculate all we want, and now I know some of the companies have already started looking into Ethereum-based ETFs, right? Now that they had success with the BTC-based ETF, so they're talking about Ethereum-based. Also, because I think it consumes less energy, less carbon footprint compared to BTC. So anyway, so that's probably a topic for another day. Now, circling back to Gretchen on payments, right? Because we talked quite a lot about blockchain, and my company InfoVision, we have been working with a couple of partners on cross-border payments, right? Leveraging blockchain, because that's another topic that has a lot of traction towards smaller banks or even big banks, because cross-border payments usually takes 3 days, business days, and then involves a lot of players in between, correspondent banks on both sides. And there's no certainty on the FX rate, especially if you're transferring from one currency to another, and the fees also, right? So I think blockchain has a lot of benefits in that the transactions can be almost instantaneous, at least fraud proof, because nobody can touch it, is decentralized, and the fees are actually in pennies, and you have the FX movement also arrested to a little bit, because it doesn't take 3 days time, right? So what are you seeing in the blockchain space as an impact to payment methods?
Yes, definitely. As you mentioned, on the cross-border trade is definitely an interesting use case. There are other use cases that I was exposed in the past that are more probably solving for countries where the inflation is very high. So the saving aspect that the blockchain and all of that can bring for users to be able to access funds and save. That's an interesting one. And I'm also, again, it's very early, but I'm also trying to have a general position in terms of blockchains and cryptos and wallets, how this can yes, become as part of a end-to-end wallet where you can actually transact directly on point of sale, even paying directly from the phone and all of this. It might be interesting to see the disruption on that area as well. But there are other technologies or other pieces of improvement happening that are solving similar problems when we think about cross-border trade as well. We think about Visa Plus, for instance, all the movements that they are achieving at this point. Or if we think about the different experiments happening with a real-time payment from the TCH, but even with the Fed now, they are actually moving into some early advancements to solve for that. That might be an interesting playbook as well. So let's see how all the pieces will come together at the end of the day. But what I can tell as an immigrant is that it is still so difficult to wake up in the middle of the night, recalling that you need to send money to your family, and having the third moment when you block and say, okay, what should I do now? Should I go to Wise? Should I go here? So this is still a problem, something that might feel like, okay, we already solved this, let's move on. No, it's been a source of stress and friction for the users, even today. So I still dream of that day where I feel like, okay, I need to do this Zelle to my husband, or maybe send this Zelle equivalent to my family in this part of the world. So that's a reality. Again, that will bring other situations like, okay, how you do with the financial inclusion, how you onboard people. Now we understand that there is a big movement in the countries, people moving all over the world. So that might bring other points, but at the same time, it expand into other use cases like identity, as you mentioned, onboarding. How am I able to plug in my identity with companies like Nova Credit, where I can plug in my credit from country X to country Y? So all of this is changing. So I still have that big dream where this can be seamless and without that friction. So if it's a blockchain, if it's the cross-border trade enhancements with networks, I know Visa has a solution and MasterCard as well, or if it's more on the countries realizing that this is a reality. I just want for this to be a happiness moment at the end of the day, right? So I think we're getting closer, but there's still work that needs to be done.
Yeah, no, absolutely. And, more than the big banks, or, credit unions, I think the fintechs are adopting very easily or creating solutions, very easily, because they don't have that, legacy technology or the baggage. So they can start small, they can iterate things quickly, and they are focused on just one solution. So there are a lot of fintechs, which actually provide these solutions in terms of payments, cross-border payments, or blockchain solutions. Jennifer, question to you. So how do you think the banks and financial institutions can coexist or work with partners, products, or fintechs?
Yep. So this is what I do every day. So this is, I'm passionate about it, and it's the most fun part of my role, which is really thinking about how we strategically partner, how we leverage partnerships with startups, with scaled fintechs, and then also with venture capital funds and other types of funds that are working really early on with the companies that are rolling out these technologies. Many of these technology partners are what we call value-added service providers. So they leverage technologies that they might not have created themselves, whether it comes from a network, a bank, another technology provider, a blockchain, whatever it may be, ChatGPT, and then they build on top of it. And what's great about that is they're very innovative. They're pushing the technology to its limits. And they really think about what's next, what's 5 years, 10 years down the line, and how do we solve those problems? Some of the problems Gretchen mentioned in cross-border and financial inclusion, but other problems as well, and identity generally. And so the way we think about partnering is we partner heavily with funds to understand who they're working with and what they're thinking about. So it's not only access to innovation and technology, learning, but it's also just knowledge sharing generally across the globe. And then we also have a number of programs, and a number of corporates and banks have these programs that are either accelerators or some type of fintech program. Ours is not a true accelerator for startups. It is more of a strategic partnership program called Start Path. And we have different cohorts that relate to different problems we want to solve or different technologies we want to look at. And then we also have a program with many scaled enablers that can help us push out new technologies and also bring some new technology to us. And between all these programs, plus strategic bilateral relationships that we have with many financial technology companies and general technology companies, we're able to really stay ahead of what's coming and try and work together to solve these problems. We also work heavily with governments to do that and bring them some of the fintechs that we work with. And I think that's where these partnerships get really strong. It's not about what you alone can do, whether as a corporate or a bank or a government or a merchant or a consumer. It's about what everybody does together to bring things about. And so we think the power of partnerships is extremely strong. We believe that it is not only happening today, but it's also the way that the future will work. It's no longer about just your company and what you're doing. It's about who you're building with and how you're doing that ethically and from a diversity perspective. We really think about that from a sustainability perspective. And, one of the things that we've seen successful with either where we're a partner that someone's bringing into their partner program, or it's a partner we bring into ours, is really spending time to understand the different technologies. It takes a lot of time. It's not necessarily revenue generating at that moment. It may never be revenue generating. There are things that we do that aren't about revenue. It's about what's the right way to roll out technology, what's the right technologies to get behind. Sometimes we test things that are really, really new, and we know that they may not come to fruition. And sometimes we, really are able to get those new use cases with our fintech and VC partners and other corporate programs out there. And so, if I think about our StarPath program, it's not only award-winning, but we have over 350 startups that have come through our program in the 8 years, 10 years, something like that it's been around. And we're able to keep connection with all of these companies, even though they're no longer active in the program day to day. We're no longer meeting with them constantly to understand their technology, how we help them grow through the work that we do. And so that's been really valuable. We have, I think we're at, don't quote me, but it's either 11 or 14 unicorns, and we don't expect them all to become unicorns, and they don't have to, because again, it's not all about either revenue or commercial opportunity, although that is a focus as well. And then the other thing, and this has been going on for many, many years in other industries, whether it be retail, food, partnerships have always been there where two brands come together to roll something out. And, it's like the 1 + 1 + 1 = 5 equation. And so we really think about how do we get that exponential power from our partnerships and how we provide exponential power to those that we partner with.
No, absolutely. I mean, if there is a partner who's already doing the work, right, you don't want to reinvent the wheel, but rather, work together to bring the best of, both the worlds, right? And I know we are probably running short of time, but we covered, I know, Gretchen, Jennifer, you already included topics on financial inclusion, doing things ethically. Now with AI, that was one of the concern, right? We have seen some of the issues where I think Navy Federal Credit Union got slammed because they were not approving borrowers, they were discriminating. I don't know if it was an automated underwriting, so on and so forth. So we'll have to do things ethically, right? It's not about doing things right, it's about doing the right things, right? So that is more important. Now I see, Arvind, you're back online. So how much time do we have?
Yeah, we have 3 minutes.
3 minutes. Okay. So I know we didn't cover cybersecurity a lot, but I know we touched, in different formats, covering blockchain payments, etc. So that is another thing that all the companies are spending a lot of money, time, and exploring technology. And I know Gretchen had to drop off, but she talked about JP Morgan during their Davos meeting. They mentioned 45 billion attacks a day, right? So that's another hot topic that all the institutions are grappling with to see how to protect their assets. I think there are 2 questions from the Q&A window, and I believe we have already answered them throughout this webinar. One asks about upcoming days for payment of things. I think we addressed that. Any other questions that we have, Arvind, from the window, chat window?
These are the 2 questions which you've seen.
Okay. All right. I think that's all we had for today. We had a couple of more questions, but in the interest of time, I think we can wrap it up. So thank you, Jennifer, Gretchen, and Charles, for your time and the insights. There's a lot of good things that I learned today, and I'm sure all of the participants, audience also, had taken home the inputs and feedback and the learnings from all of you. Thanks for your time. Back to you.
Thank you, Natarajan. Thank you, Gretchen, Jennifer, Charles, for this engaging and informative sessions. I hope the audience would have enjoyed and understanding the deeper about the topic. So before we conclude, I wanted to express my gratitude to our community partners, speakers, attendees for enriching knowledge through this forum. Our panel speakers have shared insightful thoughts and making this webinar a valuable experience. For your information, today's webinar was broadcasted live in our YouTube channel, and the recording will be available for your reference shortly. Also visit our website, aicosport.io, and follow our social media handles for updates on upcoming and knowledge-sharing topics and events that will make your horizon broader. I would like to extend my sincere thanks to our knowledge and innovation partner, InfoVision, and our technology partner, Digit7, for contributing towards making this webinar a huge success. Thanks a lot, everyone, for joining this webinar. Have a fantastic day.
Thank you.
Thanks, everyone. Have a nice
Thank
day.
you.
Take care. Bye.
Bye.